I'm Russell Poynton. I lead on consumer research at Edison Group. With me today I have Richard Hutton, the CFO of Greggs Group. Greggs is into the second year of its 5-year growth plan, which at the time management described was an ambitious target to double its revenue over the space of 5 years. And this week Greggs also reported its full year 22 results. So today we'd like to get into those growth drivers for the business over the next 5 years and see how the company's progressed over the last year. Hi, Richard.
Hi, Russell.
Thanks for coming in.
My pleasure.
There are 4 key growth pillars in the 5-year plan. Should we look at those individually and see how you progressed over the last 12 months? So the first one is the space expansion, where could you talk about what you're doing now versus what you did before and why you think there is such a good space opportunity for Greggs?
Yeah, I guess, Greggs has been growing its store base at around 100 net store openings a year for some time, actually. And so that was still the established rate that we found was a rate at which we could acquire good shops and make good returns. I think what's changed in the post-pandemic period is there is more high-quality space available to us at better rates. So it feels like if ever there was a time to sort of try and increase the pace, now is it. We think there's a potential for significantly more than 3,000 stores in the UK, and we've got 2,300 at the moment. So last year was the first year we upped the pace to 150 net openings for the year. I say that, 147, but hopefully you'll forgive us the 3. So that's gone well. It was a big step up for the team, and they've worked super hard to achieve that. And we believe we can carry on at that sort of pace for now, but we'll be sensible about it. And if we think that's too fast, we'll pull it in. But it's so far it's worked well.
And the second growth pillar for you is the move into evening trade, grow the evening trade. Could you just talk about why you think that is such a good opportunity for Greggs and the implications for just what the menu, what's happening to the cost base?
Yeah, I mean, Greggs is famous for breakfast and for lunch and being the sort of the snacking on the go market. But those are only sort of 3 parts of the out-of-home market. The 4th one, and the biggest one, is the evening day part, which is generally measured post 4 p.m. And in that day part, we've got 1.2% of the market, which is way below our penetration at other times of the day. So we know that other players in this market do very well at that time of day, and that their product portfolios are not dissimilar to Greggs. So we think it's an obvious opportunity. The thing is, customers don't necessarily have us top of mind in the evening, despite the fact that when interviewed, they tell us that the products that we have are perfectly acceptable for that evening day part. We know we can develop that further. So, we've already had a lot of success with our core range, with pizza slices in particular, chicken goujons and wedges. But over time, we'll probably augment that with some other products which we think will be suitable for the evening, and that primarily will be around hot food. So we've got some trials live at the moment with things like hot wraps assembled in store to order. And we've been trialing loaded wedges with sort of vegan chili sauce and katsu chicken sauce on top. So a few things, sort of as work in progress at the moment. But, clearly people accept Greggs brand at other times of day. And we think, in time they will start to look for it in the evening. But it's going to take a while because we've got to change that sort of mindset. So it's going to take time. I think it's going to take some marketing investment to do that. And there's a big overlap also with one of the other pillars, which is delivery, because I think delivery in the evening opens up more of our estate to actually be able to serve the evening market as well. So naturally, when you first think about the evening, you think, okay, which are the busy areas where we'd have people passing in the early evening? And we're not talking about competing with restaurants here. So it's people on the go who need either snacks or light meals to get them sort of onto the next destination. So busy footfall areas are obvious, but a lot of the Greggs legacy estate is suburban on high streets. And I think traditionally we used to think, well, that probably hasn't got a role in the evening day part. But actually, when you start to think about if you could deliver to people's homes, then what you have is a huge estate of dark kitchens sitting there waiting to be used. Now, this isn't easy, but I think if we can start to crack that and change consumers' expectations, then if they can seek the value and the sort of their favourite products in the early evening as well, then a lot of that estate is ideally situated to try and serve that market.
And the third growth driver is digital. Now, there's a lot in digital. There's delivery, there's click and collect, and that kind of thing. Could you just talk about what that opportunity is for Greggs in the future?
Yeah, I mean, it's something we weren't doing at all before the pandemic. We'd had some trials live, which was fortunate because we were in a really good place to roll that out when we reopened in 2020 in the summer. So we have a relationship with Just Eat, where more than 1,200 of our shops actually are in a delivery catchment served by Just Eat. And now delivery sales are 5% of our turnover, and that 5% we just didn't have before the pandemic. We think there's more we can do. We don't always do the best job operationally at the moment because it's a new discipline for our shop staff to learn. So as they're getting better at fulfilling orders, we think there's more natural growth there. We think we can increase awareness of Greggs as a delivery option because not everybody knows you can get Greggs delivered. So there's more we can do in the communication side of things. And then there's that whole piece about the evening, and if we can sort of start to sort of ignite that evening trade and get that sort of crossover between the evening day part and delivery, we think there's real growth to be had in the future.
And the fourth growth driver is in broadening the appeal and improving customer loyalty.
Yeah.
A lot of the things we've talked about are basically making Greggs more accessible at different locations and times of day.
Yeah.
So what is customer loyalty? You know, what are you doing to drive customer loyalty and getting people to visit Greggs more?
Yeah, so this starts with our digital app, which allows customers to access functionality like menu information, shop finders, all the traditional stuff. But it also has a built-in loyalty mechanic. So it's like the old coffee stamper card where you would sort of get a stamp for each coffee and then get a free one. You get a stamp for every product you buy at Greggs. So across all the different food and drink categories, you're collecting points as you shop as long as you scan the app. Now, for every 9 products you buy, you get a 10th one free. So fundamentally, it's like getting a 10% discount on the headline prices. And as people have kind of woken up to that, and we've kind of pushed it much more significantly through our marketing in the fourth quarter of last year, I think they've adopted it, and we've now got 1.1 million active users. Now, the tests that we did before we rolled out the app suggested that if a customer goes from being a non-app user to an app user, they would come 40% more often to Greggs. So it's a big increase in frequency. And we've been able to test that now with the people that have joined more recently by tracing back sort of tokenized transactions before they joined this scheme to what they do now. And the evidence is it's more than 40% certainly on the 2 cohorts that we've tested so far. So we're very encouraged by that. So in itself, as a loyalty mechanic, it's a great way of rewarding customers for their frequency of visit. But the longer term, possibly more important thing is that we then start to learn about their behaviour and where the gaps are and the things that we can do to make the Greggs sort of experience more attractive to them. And just to raise awareness of the things that we sell. Some people just don't realise, it's interesting. We know there are examples of people who come in for food items without realising that they can get coffee in a deal, and vice versa. And so we've been starting to experiment with this in a CRM way to communicate with them and highlight the opportunities. And the early signs are good in that respect. So this is a very long-term sort of investment for us, but fundamentally, I think it's the way marketing happens in the future. It's a very much more direct-to-consumer relationship. And that database that we're building from these active customers is a really rich sort of encyclopedia of their behaviour. And we've probably got more data than we can use at the moment. We're building our internal capability so that we'll be able to do more and more with that in the future.
And supporting all of this, there's lots of investment in capital programs over the next 4 years now. I guess we're a year in. Could you just talk about what you're actually doing with the capital, the phasing of that spend, and the implications for your cash flow and, dare I say, shareholder returns over the next few years?
Well, to that last point, I think shareholders should feel that the ordinary dividend is well underpinned, and that's something we're very committed to, a progressive dividend policy. Yes, there's quite a big capex program ahead. It's self-funded, so the business generates cash very well, and we're carrying a larger than normal amount of cash into this program because we knew that it would be needed to take this to the next phase of growth. So there's a base level of retail expenditure, which is the requirement to fit out the shops to keep at that 150 pace. There's also a need to keep refurbishing shops and make sure that they're modern and up to date and got the latest facilities. Broadly, the refit cycle for that is about 8 years, and we've had a sort of like a bit of a hiatus through the pandemic. We were in a good place because we had a very well invested estate going into the pandemic, so we were able to take a bit of a step back during that squeeze. Coming back out of it now, we're starting to increase the rate at which we refurbish shops. So that's the retail side. The other side, and the more significant one in the next few years, will be trying to increase the capacity within our supply chain so that we can open more shops. We do have some capacity in the existing logistics chain and on the manufacturing side, but we know about 2 years from now we need to have more capacity coming online. So the current plan is that we have 2 distribution centres within our existing network of regional distribution centres, of which there are 8 around the country. There's 1 in Birmingham and 1 in Amesbury, and both of those with work can be extended. And we can add about 300 shops capacity across those 2 sites with work that we'll do over the next 18 months. So we expect by the back end of 2024, we'll have more capacity coming on stream from those. And then the next phase is a really interesting development, which is looking at a national distribution centre in the Midlands, which will help all of our distribution centres in the south of England to process more shops in time. So that phase of it creates capacity all around the network and allows us to keep it on with the opening programme. But we take this in stages, so each decision will be made in the light of how the market's going, how our opening programme is going along the way. We're really encouraged at the moment, and we'll certainly sort of crack on with the 2 regional distribution centres I've mentioned. And then at the back end of the programme, if we're still as successful as we hope to, we'll need more manufacturing capacity as well. So we'll start to add extra manufacturing lines for some of our favourite products on a frozen manufacturing site likely to also be in the Midlands.
Mm-hmm. And could you talk about the implications for your return on invested capital? It was interesting at the results presentation. I don't think I can recall a presentation where return on invested capital was, got so many questions. So could you just talk about how you think about that going forward? Because your return on capital is quite high at 21%, and it's been stable to up over the last few years.
Yeah, and that's our job, isn't it? Is to keep that going. I mean, Greggs is, I think, well regarded for the return on capital that we make. We are, as a management team, we're actually incentivized on that. So all of the long-term incentives in Greggs have traditionally been a balance of earnings per share growth and return on capital employed being maintained at a healthy level. And that continues to be the case in the next phase. So our job is to try and make sure as we invest, we use the capacity well. We adopt efficiencies along the way. We also deliver the carbon journey and all the ESG objectives that we have. But fundamentally, it will be a challenge at times, I think, as we take steps up in capacity on the logistics and on the manufacturing to do that. But we know there are things we can do along the way, and that's our challenge. But we're not looking to dilute those returns. So certainly, I know that the targets that have been set are very much in line with current performance, and our objective will be to grow the business and still make those returns.
And finally, could you just summarise what happened in the last year and how you think about the year coming? FY22 really, from a profit perspective, turned out how you thought it would, but the way you got there was probably very different to what you thought you would at the start of the year. So, and I know cost inflation is changing between the years. Could you just talk about what those drivers are and how you think about what are the other positives and negatives towards hopefully improved profit growth in the coming year?
Yeah, I think we kind of looked at 2022 and thought this would be the start of normalisation, didn't we? And then in many ways it sort of was, but then of course, the invasion of Ukraine led to huge spikes in energy and food costs mid-year, which we've had to deal with. I think we've struck the right balance last year in terms of maintaining our competitiveness on pricing. So we didn't pass everything through to the customer because of the rapid increase in food inflation mid-year, we were chasing that a little, and we put through 8% price inflation last year and incurred 9% cost inflation. I think going into this year, we're in a much more balanced position where it will be easier to recover the cost inflation that we foresee. There'll still be quite a lot of cost inflation in the year ahead, so we think it'll be around 9 to 10% still, because wages are a much bigger factor now. Our average wage award across the group has been 8% for the year ahead. And of course, we're still seeing the annualisation of food input inflation in the first half of the year, although we think that will tail off as we get towards sort of Q4 of this year. So it's a year that's, nobody knows, do they? We're all kind of wondering what the next thing will be. We've had so many things thrown at us in recent years, but I think the way Greggs has coped with it is a remarkable sort of testament to the breadth of appeal for the business, the breadth of its estate, its customer base, and its product portfolio. So I've always felt Greggs is a resilient business, and I think, if ever there was a time to have tested that, it's the last few years. So, we feel reasonably confident. We feel we've got the wind in our sails a bit, and we've had a very good start to the new year. And hopefully we're in a pretty competitive position, and we're very much on the front foot coming out of the pandemic. This will be year 3 of the growth program, and so far, I think if you take all the different growth pillars, if you average those out, we're very much on track with that. So we're excited about what the new year holds.
That's great. Good luck for the coming year. Thank you for your time.